Gold's record-breaking rally, more complex than just safe haven in turbulent times. Part 1, Executive Summary. International gold prices have shattered successive resistance levels in an unstoppable surge. Behind this historic rally lies a confluence of forces from the Federal Reserve, global central banks, and retail investors. Understanding these key drivers is essential for navigating future market opportunities. Current market overview. Have you noticed the flood of gold-related headlines recently? Walking through shopping centers, the price tags at jewelry counters are jaw-dropping. Opening financial apps reveals phrases like historic highs and breaking through the sky. Gold, humanity's oldest store of value, is staging a spectacular bull market. Many instinctively think of the age-old wisdom, buy gold in turbulent times, but the drivers behind this rally are far more sophisticated than a simple adage. Today we'll dissect the core forces propelling this golden surge. Key driving forces analysis. I, the primary engine, Federal Reserve rate cut expectations. Imagine the relationship between gold and the US dollar as a balance scale. On one side sits gold, stable but non-yielding, no interest payments. On the other side are US dollar assets like treasury bonds, which provide interest income to holders. Current market consensus. The Federal Reserve will likely initiate a rate-cutting cycle this year. Once rates decline, yields on dollar-denominated assets will fall. This effectively reduces the weight on the dollar side of the scale. Consequently, the gold side naturally rises. Investor behavior. Sophisticated investors are positioning ahead of the curve, channeling capital into gold markets in anticipation of future rate cuts. This represents the most powerful monetary factor driving gold's ascent. #2. The most committed buyers, central banks, aggressive accumulation. While retail investors may still hesitate, central banks worldwide have emerged as unwavering mega buyers. Supporting data. According to the World Gold Council, global central banks have been net buyers of gold for consecutive years, with particularly aggressive purchases from China, Poland, Singapore, and other nations' monetary authorities. Central bank gold acquisition motives. 1. Asset diversification and de-dollarization. Complex international dynamics in recent years. Nations seeking to reduce excessive dependence on the US dollar. Gold serves as an independent asset free from any single country's credit risk, represents the ideal alternative reserve asset. Ultimate safe haven asset. Following geopolitical events like the Russia-Ukraine conflict, gold's ballast characteristics have become increasingly prominent. Central banks acquire gold as the most reliable insurance for national financial security. Strategic significance. These national team purchases, sustained and large-scale, provide the most solid foundation for gold prices. This isn't short-term speculation but long-term strategic allocation. 3. The most anxious sentiment, geopolitical safe haven demand. This represents the modern manifestation of turbulent times gold. Uncertainty factors, ongoing regional conflicts, electoral uncertainties facing major global economies. These factors permeate markets with underlying anxiety. Safe haven mechanism. When people feel unsettled, they instinctively seek shelter. Gold, having withstood millennia of trials, naturally becomes the global refuge for capital during such periods. This panic and risk aversion sentiment adds fuel to gold's upward trajectory. Investment outlook and risk assessment. Investment opportunities. Federal Reserve rate cut expectations provide monetary policy support for gold. Sustained central bank purchases ensure long-term demand. Geopolitical uncertainty strengthens safe haven demand. Structural shift in global reserve composition favors gold allocation risk factors. Potential Federal Reserve policy pivots. US dollar strength could pressure gold prices. Market sentiment volatility and uncertainty. Technical correction risks after significant gains. Key monitoring points. Federal Reserve monetary policy developments. Global central bank gold reserve changes. Geopolitical situation evolution. Inflation data trends. And US dollar index movements. Technical analysis considerations. Support and resistance levels. Strong institutional buying provides robust support. Previous resistance levels are now serving as support. Momentum indicators suggest continued strength. Market structure, broad-based participation across investor categories, healthy consolidation periods within the overall uptrend, volume patterns confirming price movements. The current gold rally represents a convergence of fundamental factors rather than mere speculation. The combination of accommodative monetary policy expectations, strategic central bank accumulation, and persistent geopolitical tensions creates a compelling investment thesis for gold. However, Investors should remain vigilant about potential policy shifts and market dynamics that could impact this trajectory. Diversified exposure and risk management remain essential components of any gold investment strategy. This report is for informational purposes only and does not constitute investment advice. All investments carry risk, and past performance does not guarantee future results.